One area of the market seeing huge inflows are exchange-traded funds, which, with assets increasing, by the way, by more than $280 billion just this year. So what is the benefit of investing in ETFs, and where are the opportunities, more importantly? Joining me now is Global Trends Investments President Tom Lydon. Tom, okay, tell me about ETFs. Why are they such a good investment?
Well, 77% of active managers actually have underperformed the market so far this year. So if you can't beat the market, why not join the market? And as the market's hitting new highs, there really are great opportunities to step in line at a very, very low pace and a low rate as well. But surprisingly, most of the money isn't going into U.S. stocks in the ETF world. GLD, which is the largest gold ETF, is the winner of the most assets, almost $13 billion so far this year. And also emerging market ETFs have garnered almost $23 billion so far this year. So you've got central banks that are not as secure with their own currency, that are piling money into gold, and also a lot of bargain hunters that are looking for opportunities in emerging markets.
Well, we're showing a graph right now where a lot of that money, that inflow into ETFs, where they've gone. But what do you like, Tom, most of all? Which of the ETFs that you get the pick?
Well, in the U.S., dividend growth-oriented ETFs have been hugely popular as people are looking for stability and also low volatility. So one of the most popular is the ProShares Dividend Aristocrat ETF, NOBL, where you're getting a nice dividend, where you're also getting quality-related stocks.
What kind of dividend, Tom?
It's almost in line with the 20-year, which is a little bit over 2%. So if you're feeling like Yellen's right in what she's giving you as far as messaging and rising interest rates, here's a way to get that income where you're also invested in the stock market.
Very good. What else do you like? You like the Spider?
Well, the S&P 500, you can't beat it, especially if it only costs you 6 basis points to be in there. But emerging markets, a place to be. I think if you don't have emerging markets, it's been an unloved area for the past 3 years. You've got EEM and VWO, which the expenses are only 15 or 16 basis points. You can't really get that in an actively managed mutual fund or a separate account, and you've got the diversification and tax efficiency. So the word is, make sure you diversify.
Always. And lastly, Tom, we've been talking to a lot of market people today. If we have a blowout jobs number at the end of the week, does that raise the likelihood of a September rate hike?
Well, that might happen. So the key is, on your fixed income side, knowing rising interest rates can definitely hurt bonds. Make sure you're diversified. People are shortening up on treasuries, buying more active ETFs on the short-term fixed income side than longer-term 20 or 30-year treasury ETFs.
Very good. Thank you so much, Tom Lydon.